Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at Satellogic.
If you find our talks useful, please consider subscribe, like, and comment underneath.
So yeah, let's just get right into it, I think.
Yeah, totally. So if you bought a stock that literally doubled its market cap in 5 days, your first instinct would probably be to pop champagne.
Right. Absolutely. I mean, you'd be celebrating.
Right. But if you look closely at the underlying tape during Satellogic's just insane 107% run this past March, a very different picture emerges.
Yeah, it really does.
Because the smartest investors in the room, they weren't celebrating at all. They were quietly, methodically heading for the exits.
It's such a fascinating disconnect, between the fundamental headline and the actual technical reality.
Exactly. So today, we are figuring out exactly why that happened, what it means for the space sector over the next couple of months, and how this massive defense contract is basically completely rewriting the valuation model for orbital intelligence.
Right. Because we are looking at a company that is executing a textbook pivot here. I mean, they're transitioning away from being viewed as just this, speculative, high capex space imaging operator.
Right, like just taking pictures.
Yeah, exactly. And they're turning into a highly integrated defense contractor. But, like you noted, the institutional money flow tells a much more complex story.
So the next 2 to 4 months are going to be hypercritical for anyone navigating this space. Not just because of this single company's pivot, but because the entire sector is, it's bracing for a tectonic shift in how space assets are valued.
Yeah, the rules of the game are changing entirely.
So let's isolate the specific catalyst first,
Yeah.
because that headline is what generated that massive initial surge.
Right, the Navy contract.
Exactly. We saw this new subcontract agreement formalized with Innovative Defense Technologies, and that's specifically to support the U.S. Office of Naval Research. Now, government contracts, they get handed out all the time, right? But the market reacted to this as if it were a fundamental restructuring of their whole business model. Why did this specific naval agreement trigger such a violent upward repricing?
Well, it's because it represents a complete shift in the quality and the margin of their revenue. To really get the magnitude of this, you have to look at how Earth observation companies traditionally operate.
Which is pretty commoditized, right?
Heavily commoditized.
Yeah.
Historically, the model is, you put a satellite in orbit, you take these massive terabyte-sized pictures of the Earth, and then you just sell that raw visual data by the square kilometer.
Right. Just raw pixels.
Exactly. But the problem is, beaming down massive image files takes so much bandwidth, and downloading them to ground stations introduces severe latency. It's basically a race to the bottom because anybody with a camera in orbit can sell a picture.
Wait, so they're moving away from just being like a raw data pipeline?
Yes, exactly. This contract validates their shift into proprietary AI processing right at the edge. They aren't just selling pictures to the Navy anymore.
Okay, so what are they doing instead?
They are running the imagery through their own artificial intelligence software while the data is still in orbit. So instead of beaming down this massive, heavy image of, say, the South China Sea, and making a naval analyst squint at a screen to find an adversary's frigate. The satellite's onboard AI identifies the frigate itself and just beams down the longitudinal and latitudinal coordinates.
Wow. Okay, so that must save an incredible amount of time.
Oh, it turns a 3-hour download into a 3-second transmission. That is an integrated mission-critical defense solution.
That's a massive paradigm shift. It's essentially the saucification of space.
That's a great way to put it, actually.
Yeah, it reminds me of a commercial photographer who, usually shoots high-volume real estate listings, and then suddenly they get hired by the CIA.
Right.
The physical camera lens might be exactly the same, but the margin, the security clearances, the valuation of the work, it all just skyrockets. They aren't selling a photograph anymore. They're selling actionable intelligence.
And selling actionable intelligence commands an entirely different multiple on Wall Street. What the market recognized in late March was the immediate impact this shift has on their fundamental metrics.
Because space is notoriously expensive.
Incredibly capital intensive. The capex required just to maintain a satellite constellation usually forces companies into constant dilution. They just have to keep issuing shares to keep the lights on.
Right, yeah.
But this Navy contract, it introduces stable, non-dilutive capital. It fundamentally alters their cash flow trajectory.
Which perfectly explains why their fundamental health score is sitting at a 9.55 out of 10 right now. That's exceptionally high.
It is, yeah.
But I do have to push back here for a second because I'm looking at the broader space sector, and it's basically a bloodbath of competition out there.
Oh, totally.
You have these legacy defense contractors with infinite budgets, decades of government lobbying experience. If you are Lockheed Martin or Northrop Grumman and you see the Navy paying a premium for in-orbit AI processing, why can't you just reverse engineer this capability tomorrow and price a smaller player out of the water?
That is the defining question for literally any emerging player in the defense sector. And the answer really comes down to architectural moats.
Okay, unpack that. What kind of moat are we talking about?
Well, a lot of the newer space players and even some of the legacy defense contractors operate primarily as systems integrators.
Meaning they piece things together.
Right. They buy a standard satellite bus,
Yeah.
the physical chassis and power system from a legacy manufacturer.
Mm-hmm.
They buy the optical sensors from someone else.
Mm-hmm.
They contract the launch through a third party. And they license the AI software from a commercial tech firm. They are basically cobbling together off-the-shelf components.
And when you have 5 different vendors, you have 5 different bottlenecks, right?
Precisely. But Satellogic owns the entire stack. They are entirely vertically integrated.
Oh, wow. Everything.
Everything. They design and manufacture the bus, they build the optics, they write the AI algorithms, and they manage the constellation operations. This vertical integration is what prevents a lumbering giant from easily replicating their agility.
I see. So if they need to pivot, they don't have to call 4 different companies.
Exactly. Say the Office of Naval Research encounters a new type of radar-evading maritime vessel. They need the tracking algorithms updated immediately. Satellogic can push a software update across their entire orbital fleet in a matter of hours.
Because they own the code and the hardware.
Right. A competitor relying on disjointed subcontractors might spend weeks just getting permission to alter the source code.
That makes total sense. I mean, in naval warfare, a 12-hour latency in intelligence is as useless as a 12-year latency. You need real-time data or you just don't need it at all. So the speed of iteration is the actual product they're selling.
Yes. That operational agility is their moat. It
Right.
protects their market share because, for defense clients, that speed is the entire value proposition.
Okay, so the fundamental story is airtight. We have a 9.55 health score, a vertically integrated manufacturing and software moat, and the validation of a major Navy contract.
Yep.
Which brings us to the massive contradiction in the data. If the tech is that impenetrable, why is the institutional money running for the exits?
Ah, right. The technical setup.
Yeah, because if I'm looking at the tape during that 107% surge, the sheer volume of sell orders from institutional desks is staggering. They were unloading millions of shares.
It was heavy distribution for sure.
It's like the hedge funds bought the VIP tables early, and right when the club gets packed with retail investors eager to celebrate the Navy contract, those funds are quietly slipping out the back door, leaving retail to pick up a massive bar tab.
That is the exact anatomy of institutional distribution. And honestly, it's a brutal reality check for anyone who trades headline news.
How so?
Well, when the naval subcontract went public, we saw a classic 100% gap up. The stock didn't grind higher over a few weeks, right? It instantly repriced overnight.
Yeah, it was violent.
And that kind of violent upward momentum immediately pushes the asset into heavily overbought territory. The institutional investors who held the stock prior to the announcement, or who got in at the absolute institutional ground floor, they look at a 100% gain in 5 days and they automatically trigger profit-taking protocols.
Right. They aren't sitting around debating the long-term geopolitical implications of in-orbit AI. They see a triple-digit gain on their terminal and they just hit the bid.
Exactly. They distribute their shares into the liquidity event. And who's providing that liquidity? Retail buyers.
The retail buyers who saw the Navy headline got major FOMO and rushed in to buy at the absolute top of the gap.
Bingo. The smart money is systematically transferring the risk to the retail money.
So for you listening and analyzing this setup, the easy money, that initial violent sprint, it's already evaporated.
Gone.
We are now sitting in what technical analysts refer to as a high-handle consolidation phase. The stock is essentially trading sideways, digesting that massive move and shaking out the weak hands who bought at the peak and are now sweating like a 10 or 15% drawdown.
And that consolidation phase requires real patience. The chart needs time to establish a firm base. You never want to be the one providing exit liquidity for a hedge fund. You just have to wait for the distribution volume to dry up.
Wait, so if Satellogic is just treading water while institutions cash out, who or what actually creates the new valuation floor? Because their own Q1 earnings can't possibly carry the weight of 100% multiple expansion on their own, right? I mean, they can't realize the revenue from the Navy that quickly.
You are absolutely right. The micro catalyst, the Q1 2026 earnings, is going to be a real show-me-the-money moment.
Right.
Management is going to have to quantify exactly how this defense pivot translates into forward guidance. If they miss expectations, that 9.55 fundamental health score won't stop the stock from bleeding out.
So it's still risky.
It is. But the establishment of a true hardened valuation floor over the next few months, that is going to depend heavily on the macro environment. We are entering a highly unique window for the space sector.
You're talking about the catalyst calendar. Let's break down the macro forces that are going to dictate the gravity here over the next couple of months.
Yeah, there are immense sentiment tailwinds building up right now. On the broader public interest front, you have NASA's Artemis II mission preparing to launch.
Which is huge.
Oh, a 10-day crewed mission around the moon. It dominates the global news cycle. And historically, these major flagship missions drive a massive influx of broad retail and institutional interest into literally anything related to space infrastructure. It creates a rising tide of sentiment.
But Artemis II is just the opening act, really. Let's look at the actual liquidity event that is casting a shadow over every single space stock on the market right now.
The big one.
The mammoth in the room. We have to talk about the anticipated June 2026 SpaceX IPO, internally known as Project Apex.
Project Apex is the catalyst of all catalysts.
Mm-hmm.
I mean, we are looking at an anticipated valuation pricing at the high end of $1.75 trillion.
I just want to pause and contextualize $1.75 trillion for you. That is larger than the entire market caps of Lockheed Martin, Boeing, Northrop Grumman, and General Dynamics combined.
It's unfathomable.
When an entity that large goes public, it doesn't just absorb capital. It forces every analyst, every hedge fund, every prime broker on Wall Street to completely recalculate the multiple for anything touching orbital mechanics.
It forces a total sector-wide re-rating. When a giant like SpaceX goes public, it creates a massive euphoria phase. We saw this with electric vehicles during the Tesla Ascendant.
Oh,
right?
absolutely. And with AI hardware during the NVIDIA boom.
Exactly. What happens is the market starts blindly buying adjacent companies, assuming they will inherently benefit from the influx of capital and attention.
It's the SpaceX IPO beta trade.
Yeah.
It's like a neighborhood's property values exploding overnight because a state-of-the-art, multi-billion-dollar stadium is suddenly being constructed right next door.
Yeah.
Even if you haven't touched your own house, the value of your dirt just went up because the zip code is suddenly a premium asset.
That's a perfect analogy.
So Satellogic, with its freshly validated defense credentials, becomes a highly liquid, accessible vehicle for funds that want exposure to the space economy, but, maybe can't secure a massive allocation of SpaceX shares at the IPO price.
Precisely. It acts as a proxy asset. Investors will utilize Satellogic to capture the beta of the entire sector's run-up.
But let's look at the dark side of that stadium analogy for a second.
Okay, let's hear it.
If a massive apex predator like SpaceX is going public and securing an absolutely unprecedented influx of fresh capital, doesn't their sheer dominance pose an existential threat to smaller operators?
Well,
because SpaceX already has tens of thousands of Starlink satellites blanketing the globe. Their Starship launch vehicle is driving the cost of getting mass to orbit down to levels that basically defy legacy physics. Couldn't SpaceX just utilize their massive IPO war chest to aggressively pivot into Earth observation, deploy their own AI edge computing hardware, and price companies like Satellogic entirely out of existence?
Yes. I mean, that is the core of the bear case.
Yeah.
And it is a highly probable long-term risk.
Right.
The SpaceX IPO is not a rising tide that will lift all boats indefinitely. Eventually, it becomes a tsunami that crushes the inefficient ones.
Is it they just commoditize everything?
Exactly. SpaceX has a ruthless history of commoditizing whatever sector they enter by driving operational margins down to near zero. So while the lead up to the June IPO will create a euphoria phase, the actual execution of the IPO and the subsequent deployment of that capital could brutally expose how fundamentally fragile some of these smaller space stocks really are.
So the clock is ticking. If Satellogic doesn't aggressively secure a pipeline of these high-margin, sticky defense contracts to justify its new valuation before SpaceX fully pivots its attention to the intelligence sector, the market will just reprice them right back down to zero.
That's the risk.
A high fundamental health score today doesn't guarantee survival tomorrow if
Oh,
their
no.
revenue pipeline completely dries up.
Exactly. If they fail to compound this Navy contract into broader Department of Defense integration, the current institutional distribution we are seeing will eventually morph into a full-blown institutional exit.
Ouch.
However, ironically, this exact existential threat is what sets up the ultimate bullish investment thesis for the stock over the medium term.
Wait, I love when the mechanics of the market flip an existential threat into a bull case. How exactly does the threat of SpaceX dominance create upside for Satellogic?
Through the inevitable wave of defensive mergers and acquisitions,
Oh, M&A.
the space sector right now is historically ripe for aggressive consolidation. The broader tech and defense giants are looking at the SpaceX IPO, and they realize they absolutely cannot allow a single entity to monopolize the entire orbital infrastructure.
Right, they have to fight back.
And we are already seeing the early tremors of this. Look at the ongoing situation with Globalstar. Current market reports suggest Amazon is in advanced talks to acquire Globalstar for roughly $10 billion.
Because Amazon is looking at SpaceX's Starshield and realizing their own Project Kuiper initiatives are lagging behind.
Exactly.
When you are a tech giant facing a $1.75 trillion competitor, you don't have the luxury of spending 5 years internally developing and testing a new satellite bus. You have to buy your way into the fight. You cannot fake flight heritage.
That is the exact metric, flight heritage. You can hire 1,000 aerospace engineers tomorrow, but you cannot instantly generate half a decade of proven on-orbit reliability.
You either have it or you don't.
Right. And this is precisely where Satellogic becomes an incredibly attractive asset. Smaller, fundamentally strong companies that already possess proven, vertically integrated hardware and validated defense-grade AI capabilities. They're prime acquisition targets.
So they offer highly asymmetric upside. They either continue to win enough independent defense contracts to thrive and justify their current valuation, or they become a highly accretive plug-and-play acquisition target for a massive legacy player.
That's the play.
Imagine a Lockheed Martin, a Boeing, or an Amazon realizing they need immediate turnkey Earth observation and AI edge computing capabilities to bid against Starshield. Satellogic is perfectly packaged for a buyout.
The valuation arbitrage makes them an ideal candidate. They have already absorbed the brutal initial capex burn, they've proven the tech works for the Navy, and their market cap is still a drop in the bucket for an Amazon or a major prime contractor.
Wow.
It essentially attaches an M&A lottery ticket to a fundamentally sound balance sheet.
So if we cut through all the noise, right, the macro euphoria, the underlying institutional selling, what is the actual actionable strategy here? How does all of this data synthesize into a clear path forward for you?
Well, synthesizing the fundamental pivot, the technical setup, and the upcoming macro catalysts, our data yields a bullish score of 7 out of 10.
Okay, 7 out of 10.
But the execution timeline is critical here. The optimal approach is not to just blindly buy and hold for the next decade. The strategy is a highly structured 2 to 4 month swing trade.
So you are targeting a very specific window to capture that sector-wide multiple expansion leading directly up to the June SpaceX IPO.
Correct. The goal is to capture the SpaceX beta run-up. But the crucial caveat, and this is really where trader discipline separates the smart money from the exit liquidity, is that you must wait for the current institutional distribution phase to fully stabilize.
Yeah, you do not step in front of a hedge fund that is aggressively offloading profits from a 107% surge.
Never.
Yeah.
You let the high-handle consolidation complete. You wait for the selling volume to dry up, wait for the chart to establish a firm, undeniable base, and then look for your entry point right before the Q1 earnings drop and the June macro events begin to dominate the headlines.
It is a delicate balancing act of timing the sentiment without getting crushed by the technicals. We know the institutional money has quietly been taking their profits off the table while the retail headlines just scream about a new space race.
Yeah, you have to be careful.
So I'll leave you with this. If that next major defense contract doesn't materialize before the SpaceX IPO fully reshapes the gravitational pull of the entire market, who will be left holding the bag in orbital limbo and who will be perfectly positioned to get bought out by the next tech giant desperate for flight heritage? It's literally a high-stakes game of musical chairs in low Earth orbit.
It really is.
Thank you for spending time with us today and for bringing your curiosity as we unpacked the underlying financial mechanics of the final frontier. We'll be back tomorrow to analyze the next big market mover. Have a great day.